Hello, everybody. Welcome to the show. This is Trading with Livewall. My name is Stephen Choi. For those of you guys who've seen this before, and for those of you guys who are new to it, basically this is where I trade my personal account using Livewall X, and you guys can see what I do and how I find trades, what decisions I'm making, and you can actually track my trading. So today I'm doing pretty good. I have some calls in American Express and SPY, and basically the market's up. So I've been doing well. But one thing to know is I actually bought it when yesterday when the market was on this upswing right here. And then as soon as the ECB announced that they would not be accepting the Greek bonds, we had this huge sell-off. And basically, so I pretty much just gained that back and made a little bit more. So you know, I'm doing pretty well, but you know, with the market volatility, it's not easy just to hold options for an extended period of time. So I know for those of you guys who've been listening to me before, I've been putting on positions, and I've been doing that as well. So this month, looks like I'm up about 21, but I was showing you guys in the past year, I started February 3rd, I think, broadcasting. So I'm about, you know, up about 29,000. I started with 50,000 back then, but basically I put a little more cash in, and then you know, as you can see, it was this huge roller coaster ride, and I still am not fully comfortable trading as the player. So I think when I was a market maker, I was always the house, and I was making markets. So I was getting an implied edge, but now I'm a market taker, which is a different scenario. So I've been on a pretty steep learning curve. One of the things I did notice is because I only have about 100,000, it is not it's not really worth it for me to have all these positions like I did before. It just didn't pan out, so I needed to be in positions shorter and for a few days with a very tight loss limit, you know, parameters and how much I can lose. So I've been experimenting with that for a while, and that's how I got my account up. Just so you guys can see, I decided to be, you know, so here you can see I was down about, let's set this way, like down here, I was down about 35K, and then I started doing different stuff, trying to figure out how to maximize my returns, you know, trading as basically somebody who doesn't have like millions of dollars with massive amounts of haircut, but somebody who has a customer account with a Reg T margin. So one of the things that I do look at, as you guys know, is volatility and order flow, and that's what Livewall X is extremely good at in displaying. The other thing I also stress for my own trading is technical trading. So a lot of times I try to match the technical chart right here. I use stockcharts.com, and then I use the volatility down here. Maybe I should try to move this up a little. Yeah, so I made the screen bigger. Yesterday's was yesterday's screen was like way too small, but it kind of is causing some funkiness on my screen. So I'm gonna mess around with it a little bit more that you guys can see it better. But as you can see, this red line is the volatility line, and I keep track of that. One of the things I do look at on the overall index is I try to see every time there's a 30-day volatility versus 120 days. So 120 days is the longer term volatility, and the 30-day is short. And every time you can see that there's a pretty big sell-off, you can see that the 30-day volatility trades higher than the 120-day volatility. And what I do is I kind of use the volatility to help me kind of gauge the fear and when it might turn around, right? So I use this 30, 120-day volatility relationship, and I put it in here to see how the volatility might affect basically the market going forward. So if you look at this, and if you look at the top right corner, you can see the IV30 is 22, and the IV120 is 20.5. So it's right over here. You'll see it, right? And then you know, now it's basically back to where the 30-day IV is much lower. So I think what's kind of happening is that the market will calm down a little bit, and I think it's a bullish sign for the market. Now, one of the things that you guys have to understand is when I say bullish, basically that could actually change throughout the day, depending on what news comes out. Because I'm a trader, I'm not so much thinking of long term. You know, so to me, long term might be a couple of weeks, maybe a couple of months. Short term might be like a 1 day trade, right? So just so you guys have a reference on that. One of the things that I do use, so I use that on the IV30, IV120. It's extremely powerful. It's not as useful for the individual stocks because obviously the 30-day IV spikes every time there's earnings. The ETF does not have earnings, so I don't have to worry about that. So I like trading the SPY just because it's the general market, and I can try to get a sense of what the general market's doing. Another thing is when I look at these, so let's say like yesterday I was looking at this right here. Don't look at these last two lines. And I was thinking 2 days ago that yesterday, if it showed this uptick, that I think it was pretty bullish, especially considering the VIX going down. So one of the things that I try to reinforce with the technical chart is the VIX. So I use the VIX for the SPX because it's pretty much the same thing. And as you can see, the VIX has come down, right? So what I'm trying to do is I have an idea on the market, but then it has to also be matching the VIX chart technicals. So let's say the VIX technicals was more up here, then I wouldn't be as comfortable, right? So yet the other day, if you look at the 2-day one, this was when I was kind of thinking, hey, if the next day, if the market goes up, it might be a good time to get long, right? But you can see, you see this trend, like it's actually making lower lows, and it's actually making lower highs, which is like, it's basically converging, right, to like around 18, 19. So I was kind of concerned that it might go back up. So I needed this to break this, basically the, you know, it had to like break going down because you can see it was kind of bouncing off this like 50-day moving average, right? So I was using this chart, the VIX chart, coupled with the SPX chart to kind of give me the confirmation that I needed to put on a trade. So that's kind of what I've been doing. VIX is extremely powerful. So any of you guys who use technicals to trade, you can use volatility as part of your variable that you analyze to make trading decisions. It's extremely powerful, and it will increase your accuracy for sure. Sometimes where it could be extremely helpful is you'll see the market like open up a lot, and then if you go to the VIX, you'll notice that the VIX is up as well. When that happens, there's always like a red flag of caution that you have to take note, which is that if the VIX is up and not down when the market's up, that means there could be still people who think the market could go down, and it has reversed many a time. So many times when the market reversed, which has happened a lot in the last, like let's say month and a half with the new volatility, it's extremely important that you take VIX into consideration when you're doing your regular technical analysis, just so you have some confirmation that you're making the right call. It's just by looking at the technicals, recently you can just get destroyed, right? So, there are times when, I don't know, like this day right here a few days ago, like on January 29th, this actually looked like it bounced off, and that it was on its, it had like a bullish technical indicator, right? So because it bounced off right here, you can see next day it had a huge up day, bounced off here, and then it went up. So that same thing happened here, and what happened? The market went down, right? So if you look at January 29th and the 30th right there, and if you look at the VIX, right, January 29th and 30th, right? So basically, you see how this was like in no man's land? You couldn't just look at this chart right here at this point and say it was definitely headed down. The other times it was up here and it was up here. So you can see it actually came off the top Bollinger Band. So you were more comfortable that the market was gonna go up because the volatility hit top of the Bollinger Band and came down. But the few days ago, basically it was right in the middle, and that should have caused a red flag. So it wasn't as certain that we were going to go up, even though basically you had this scenario going. So I bought calls anyway, and I got burnt, but I'm kind of learning as time goes. So I hope this helped you guys understanding the VIX when you're analyzing the general market as well, and to use that in conjunction to improve your success rate. Also, I'm going to talk a lot going forward about the VIX that I've just mentioned. So I'm going to talk about that relationship more, the 30, 120 IV, but also I'm going to be talking about how treasuries and how I think the dollar and basically where possibly it might be good to invest and stuff like that, because I have my own opinions on it. So other than that, I hope you guys are having a good day, and I will